Kamala Harris wants to introduce a new tax on the mega rich. Is this a good idea? Or will it unleash a monster that comes for the middle class? Welcome to America Uncovered. I'm Matt Gnezda. As you might have heard, Vice President and presidential candidate Kamala Harris is bringing joy to the American people. Sweet, infectious, overwhelming Marge Simpson with a pixie cut looking joy. One way she's bringing joy is by promising to fix the economy. And one of the ways she wants to do that is by backing U.S. President Joe Biden's 2025 budget proposal to tax unrealized capital gains. Everybody, and I mean everybody, was just overwhelmed with joy at that announcement. There was so much joy that people couldn't help but sing the plan's praises as voodoo economics and beyond insane, which I think is just plant-based insane. Ah yes, nothing beats the joy of freaking out over what could go wrong with the American economy. First, it might be helpful to explain exactly what unrealized capital gains are, unless you want to just freak out about something you don't fully understand, which has basically become the national pastime at this point. Unrealized capital gains are increases in the cash value of something you own but haven't sold yet. Here's a real-world example. Say you bought a stock worth $10, and the next year the value of that stock you own has increased to $15. You just saw an unrealized capital gain of $5. Way to go, savvy investor. If you sold that stock, that would be a realized capital gain, and you have to pay taxes on that $5 you made. But taxing unrealized gains would mean taxing that $5 now, before you sell it. And what if that stock goes back down after you already paid your taxes? Which I imagine would be a headache for people in crypto, since their projected future income is somewhere between $1 million and $0. This is why America doesn't typically tax unrealized gains. And it turns out this works out well for the ultra-wealthy. The ultra-wealthy tend to have most of their money in stocks or other investments, not actual cash. What they do is use unrealized capital gains to circumvent taxes in a scheme dubbed Buy, Borrow, Die, which also sounds like a fire James Bond title.
The ultra-wealthy buy an asset or build a company or inherit a fortune. As long as they don't sell, they owe no taxes. They borrow against their holdings and the bank gives them a really good deal.
I'll loan you $10 million with only 3% interest. But if you take a $10 million salary from your company, you'll owe almost 37% to the IRS.
So the ultra-wealthy use loan money to fund their lifestyles. That's how a billionaire can live the most luxurious life imaginable while reporting little to no taxable income. And their heirs can inherit stocks and other assets tax-free.
So the ultra-wealthy are avoiding taxes. This feels deeply unfair to the rest of us who are constantly paying taxes on our hard-earned money. And maybe Harris and Biden have the right instincts, fix the loopholes in our tax system. But just because something feels unfair doesn't mean any solution will make things better. And a lot of experts are concerned that an unrealized capital gains tax on the rich might end up affecting everybody else, including the middle class.
What that means is that if you have a house and your house has accrued in value since the time that you bought it, let's say you bought it last year, it was 500 grand, now it is 600 grand. The federal government wishes to tax you $25,000 for the increase in the value of your property, even though you haven't sold it. That's what it means.
So for anyone out there afraid you'll never be able to afford buying a home, if this is true, you'd never be able to afford keeping a home either. More joy. To be crystal clear though, Investors.com notes that Harris hasn't proposed taxing unrealized capital gains for everyday Americans. NBC News reports that the proposal backed by Harris would only apply to a narrow and very wealthy slice of the population, people whose net worth is at least $100 million. That's just over 10,000 people in the U.S. In other words, the richest 0.01%. But won't someone speak up for them? If they have to pay these taxes, they may only be able to afford 5 yachts instead of 6. Especially because this is an election cycle, fact checkers have made a point of emphasizing how Harris's tax proposal only applies to individuals with a net worth above $100 million. And they claim that collecting tax on paper profit is not unfair or impossible. I'm not worried about it being impossible. Anything is possible. I'm more worried about whether or not it's dumb, because so many government plans are extremely dumb. But I'm glad they told me it's not unfair because I really wasn't sure. This tax does raise some serious questions, though, doesn't it? What happens if assets lose value? That happens all the time. Like this wax figure of Sean Diddy Combs. Collectors would have paid top dollar for it once. Now the best you can do is keep it in front of your home to scare away intruders. But let's say that the US government goes ahead with passing the Biden-Harris proposal to tax unrealized capital gains. And it really does just apply to these guys. How would the US economy respond? Keep in mind that wealth is often a lot more interconnected than people realize. Imagine if the likes of Warren Buffett and George Soros had to sell off tons of stock to pay for their taxes. Think about what kind of effect that would have. When there's a big sell-off, everybody else's stock loses value. If you have any money in the stock market, including a retirement account, this could make the value of your stocks go down too. So while it may be technically true that Harris's proposed tax on unrealized capital gains wouldn't directly tax most Americans, it could still hit people's savings quite hard in more ways than one. So as you can see, this is a complex issue that's bringing out a lot of emotions. None more so, of course, than joy. And of course, if the stock market drops every time a billionaire has to pay taxes, how would this affect economic growth and innovation? And is taxing stocks even constitutional? These are all questions that deserve answers, especially since it has the possibility of becoming a slippery slope to something even dumber. I'll tell you after the break. Welcome back. Kamala Harris is proposing a tax targeting only about 10,000 ultra-wealthy people. But while that's the case now, it could easily affect a lot more people down the line. Why? Because it sets a precedent that the government can tax people's investments before they sell them. Need evidence of what happens when you set a bad precedent? I gotcha. Look no further than the modern income tax. In 1913, the government passed the 16th Amendment to the U.S. Constitution. That amendment gave Congress the power to tax everybody's income. An article in the New York Times from 1913 says that when the states were besought to pass the income tax amendment to the Constitution, it was vehemently represented that such a levy would be imposed only in time of war or another grave national crisis. That's how people talked in 1913. Now anyway, that turned out to be a lie, although I suppose you could argue that America is constantly in a grave national crisis. But even back in 1913, income taxes definitely weren't like what we see today. Here's a tax return from 1921 that I saw in the American History Museum in DC. A person earning a little over $2,000, or around $36,000 in today's money, only had to pay around 1% in taxes, in San Francisco of all places. As a comparison, for a single filer today, if you earned $36,000, you'd pay more than 10% in federal taxes. And that doesn't even include state taxes, Social Security, and Medicare. A lot of people say income tax is theft, but there's actually honor among thieves. With taxes this high, it feels more like a mugging. Once income tax became a staple of American life, individual income taxes started to become the single largest tax revenue for the U.S. federal government. It shouldn't be controversial to say that once you give the government a taste of something, especially power over your money, it's very hard for them to let go of it. Politicians are basically addicts. So maybe Hunter Biden's antics are just learned behavior. So the biggest danger with a new kind of tax is that it starts out only affecting the ultra-wealthy, but eventually the government decides to apply it to the regular wealthy. And pretty soon after that, to the middle class too. Just kidding. By then there won't be a middle class. What do you think? Should there be a tax on unrealized capital gains anyway, as long as the government promises not to abuse it? Leave a comment below. If you like America Uncovered's nonpartisan take on news and politics, be sure to subscribe, smash that like button, and share this video with your friends. And here's another video YouTube's algorithm god recommends. Check it out and let us know how the god is working for you. Once again, I'm Matt Gnezda. Thanks for watching America Uncovered.